Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 3rd day of May, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. It also gives you access to the chat box so that you can ask questions and participate in the discussion. On the days that you're out of your office, away from your desktop, not to worry, just point any internet-connected browser to cfrn.net/live, and there you'll find a live, real-time simulcast of the show as it unfolds. You just won't have access to the chat box. We do stream live during this broadcast on our YouTube channel, which is youtube.com/CFRN. We not only stream live, but we archive each and every daily show. We currently have over 1,700 daily shows archived there for your viewing and educational pleasure. With that, let's open with a word of prayer. Heavenly Father, we thank you today for your blessings, for your mercy, for your grace. You are our creator, our sustainer, our light and our fortress. You are our wisdom and our strength. We ask today that you would guide us, you would lead us through this meeting. May we approach our tasks with wisdom, and may we approach our members with respect. May our conduct create an environment of cooperation and kindness. Thank you for helping us to accomplish our work this day. We ask these things in Jesus' name. Amen. Well, happy Monday. I hope it's a happy Monday where you are. Let me give you the numbers from around the world. The page is working again with all my worldly data. After that, we'll go to Michael and get a recap of everything that happened in the live training room this morning. Currently, the Dow is up 297 points, almost 1%. The NASDAQ, on the other hand, is down 40 points. S&P 500 is up 17, and the Russell 2000 is up 9. In the commodity basket, crude oil up 54 cents, trading $64.12 last. Gold up $25.10, trading $17.92.80 last. That's a gain of 1.5%. And silver, hi-ho, up $1.10, trading $26.98 last. That's a gain of 4.25%. When the price of crude oil changes by $1, if you're trading futures, that's worth $1,000. If you're trading gold and holding a futures contract and the price rises $1, that's a gain of $100. Silver, when silver rises $1 in price, you're holding a futures contract. That's a profit or loss of $5,000. And again, silver up today, $1.10, currently trading $26.98 last. In the Asian markets at the close, Nikkei down 241 points, almost 1%. Shanghai down 28, almost 1%. The Hang Seng down 367, 1.25%. And in the European markets at the close, FTSE posted a gain of a little over 8 points. The DAX rose 100 points. The CAC rose 38. No movers, no shakers. It gives us a red day in Asia, a green day in the UK, and so far it is a mixed Radio Monday here in the US of A, only due to the NASDAQ, which is the only major index in the red, down 37 points. Dow up almost 1%, S&P 500 up almost half of 1%, and the Russell 2000 bringing up the rear, up 8 points on the session. So with that, we can go to Michael and get a recap of what happened this morning in the live training room. And if Michael's not quite ready, we'll jump over to a daily chart of the S&P. We always like to start with the daily chart to get our bearings so that we know where major support and resistance can be found. And if you leave your charts running around the clock, even if you turn your monitors off, but you leave the charts running, daily chart, refresh it. Just go to any other time frame, doesn't matter what time frame, and then put it back on the daily. And that straightens out the indicators. Okay, so here's the Monday candle, which began last night at 6 p.m. Eastern. Looks like an inside day. The high Friday, 4201.5. High today, 4201. Oh, that's not right. Let's try it again. Today's high, 4202.5. Friday, 4201.5. So, there's that 1 point higher, which I hopefully have taught you to be very suspicious of any new all-time highs or lows that are only just a few ticks, a few points. Be suspicious of those. When we opened last night, right here, last night's open was 4181.5. We actually opened, right here. Took us up to the high. And if we look left, we can see that, again, took us just 1 point above Friday's high. The all-time historic high remains last Thursday. And that all-time historic high in the S&P 500 is 4211. So we've got blue and climbing and the step line, both here serving as support and resistance. When price gets above it, it's support. If price dips below it, resistance. Our major support, we drew this line back last week, roughly 4167. Then last week we had a weekly trading zone at 4160/61. So if price takes out this support level that we've highlighted, there's a bit of an air pocket right here that would take us down to the 24% Fibonacci retracement. That's the shallowest possible fib retracement of the last leg up, which began March 25th And the high, again, was put in last Thursday, April 29th. And I believe Michael has joined us, so we'll go to him, and he'll give us a recap of everything that happened in the live training room this morning. After that, I'll come back. We'll go over the concierge trade alerts, the Logic 247 alerts, all that, and answers to your questions. As Michael does the recap, if you have questions for him, please put them in the chat box. He'll be very happy to answer those for you.
Okay.
So I've got your charts. It is all yours.
All right, here we go. Let me bring. Oops, that's not the right one. This one must be the right one. Yes, here it is. Okay, here we go. New month this month. All right. Good afternoon, everyone. Today is Monday, the 5th day of May, 2021. Today, well, if you can read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. I'll go through the spreadsheet first, and then I'll tell you how to take the free trial. Today being the first day of the month, we don't really have much to discuss, and it was really a slow day today. We started out with a stop out, and then we had to make that back up, and we barely did, and then get the goal for the day, and we barely did. But we made 9 ticks in crude. We lost 1 tick in gold. We made 2 ticks on the ES. Really slow start to the month at plus 105 on the morning session. And today it took 105 minutes to take those 9 trades and get to 105. And we took a total of 9 trades. So on the month now, we're at 105. Last month we were up 10,330. We started out a little stronger last month, I think, but it is what it is. So on the year now, we've made the goal 82 out of 83 days. And on the year, we're now at $63,137. That's for 83 trading days, averaging $760 per contract per 2-hour trading day. Okay. Now, if you've not taken a free trial with us and you want to, go to the homepage at cfrn.net and scroll down to where it says free 5-day trial, no credit card required. Click on that. We'll bring you to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button, you'll be sent the confirmation link. You must click on the confirmation link, okay? If you don't click that link, we don't know that you took the free trial, so you gotta make sure you click on that link. Okay, all right. So we'll get into the trades. Now, I messed a couple of things up while I was keeping track of the trades this morning, and there was one trade, this one right here. I took a 7-tick trade win on gold at some point, but I don't know where. I think this is where I did it. But we'll start out with gold at the very beginning here. Now, we start out right here with a break-even trade. Now, I was thinking we were going to have some good trading this morning because in the pre-market, it was giving some pretty good indications. Everything was all in sync. Everything was all lined up. And then the market started and it was just whipping around. And after we stopped out right here, we had a break even there. Then it made a big move down, then a bigger move back up, then a bigger move back down. And after we stopped out right here, I pretty much warned everyone that gold is going to be really difficult to trade right now until it chooses a direction. And then it came up here and it looked like it was starting to give us some move up. So I went in again right here on a long trade and ended up with a break even. I should have taken a little profit on that, but I didn't. If I'd have known the rest of the day was going to be the same way, I had taken some profit on it. But then we got into this little bit of move right here, which indicated that it was going to keep, going up the way that it should go up, but the slingshot wasn't letting us in any of that. All right. So then we had, after that trade, we had one more trade. At that point, we were still at -8. And then we had one trade where we picked up 7 ticks somewhere in here on gold. We picked up 7 ticks, and that put us at -1. And then I was drawing these trend lines all around, showing everybody how the market was just being, in between these larger trend lines, it was doing these legs up and down, but it kept giving these indications that it was going to do something, but it never did it, or it pulled back too deep, which would make you question the trade to begin with, and then it would either go and give the trade or it'd pull back a little bit deeper, which would be just enough to stop you out. Anyway, I didn't do any more trading after that in gold. I did suggest at the end of the session that it would get down to this level, and it did. And it turned around off of that and gave one long trade right here. It looks like it might have been a break-even trade, or it might have stopped you out to the tick. Depending on what you did, where you entered and where you exited. Gold was really rough today. Crude oil, crude was pretty good. You know, in the pre-market, again, same thing. Crude was giving really nice indications, but then once it started, you know, it was keeping you out when it needed to keep you out, but it was giving pretty good indications as far as prices went. And it took a little longer than we wanted for it to get to those levels. You know, like right in here, we were thinking long and it was going to get up here. You got to keep in mind the high of the day was right here at the time as it was moving up. And so it eventually got to all these levels that we were hitting early on. Then after the first hour, we finally started trading. Right here is where we ended up break even on the day. I think I picked up one tick on that one and 3 more ticks on this one to put us at +4. Then we were positive on the day at that point. 5 more ticks right here to get us to the goal for the day at that point, I think. Right, because we picked up 5 more ticks to put us at +9 on crude, but we had, in the meantime, in here, we had taken 2 ticks on the ES. Now, I had suggested during the break it was going to get down to this level, and it did, and it kept going and gave a short there and a short there. Turned around and gave a long right here. So crude, out of all the markets, crude was probably the most well-behaved today. The ES, this weekly trading zone right here, was just dogging the ES all morning. We started out right in here. There was a shorting opportunity right here, all right, that I didn't take. It came down, hit this level. This was the pullback area right here that I was saying. It pulled back, went right through it to the weekly trading zone. Then it got above the zone, came right back down into the zone, then just hovered around the zone. And hovered around the zone, and hovered around the zone, and finally broke away from it. And down here, I had suggested that it was going to get down here or go up here, one or the other. And it was, you know, the charts were saying it was going to go down. This was a short trade right in here. I picked up 2 ticks on. And it hovered and hovered, and it eventually got down exactly to that level. Then we had a pullback level up here, which it went up to. Then the new level on the downside was down here. I missed a trade there and there while I was talking about something else. Both of those would have been, well, this would have been a nice profitable trade. This one would have been a little bit of profit. It got really choppy again, and right at the end of the session, I was suggesting it would either go down to here or get up to here. And it got up to there, and now it looks like it's trying to get down to the other one. The other one is way down here. Okay, that is down at 41.85. That number is outstanding, and it's going to make it down there, I think. So all you need is the trade setups to get down there. Okay. All right, so let's go back into here. Now, if you've not taken a free trial and you want to, or if you haven't taken one in 6 months or so, and you want to, go to the homepage at cfrn.net, scroll down right here to where it says free 5-day trial, click on that, and you're brought to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number, and you can tell us your biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button, you'll be sent a confirmation link. You must click on that confirmation link, okay? If you don't click that link, we don't know that you took the free trial, so you got to click on that link, all right? All right, spreadsheet. Now, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. What did we start out with last month? Last month, our first day of the month, $780 a contract. The month before that, the first day of the month, $1,587 a contract. The month before that, first day of the month, $1,240 a contract. The month before that. Yeah, it's been a while since we've had such a slow start to a month. So I was just going back to look at it. Anyway, today is the 3rd day of May, 2021. We made 9 ticks in crude, we lost 1 in gold, and we made 2 on the ES. Put us at plus 105 on the morning session. Today took 105 minutes and 9 trades to get to $105 a contract, and we took a total of 9 trades on the morning session. Now it's the beginning of the month, so these numbers don't really mean all that much, but it's the start of a slow month. But it is our 82nd out of 83 days. of getting the goal this year, and on the year now we're at $63,137. That's over 83 trading days, averaging $760 per contract per 2-hour trading day. Okay. All right. I see there are no questions in the box. So with that, I can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, sir. I am ready. Recap of the recap.
Today, it took 105 minutes and 9 trades to get to $105 per contract.
Good job.
Thank you.
Continuing evidence that it takes as long as it takes.
Yes, indeed.
The worst thing you can do is set yourself up for failure by expecting to get your goal every day, one and done. We talked about this last week. Hey, it's nice when it happens. When you're, walking down the street and you look down and there's a $20 bill on the sidewalk. You look around, there's nobody around. You can ask if it belongs to them. It's a great thing. Mm-hmm. That's how you should treat it when you get one and done with your trading. Don't anticipate it, but gratefully accept it whenever it happens. So, once again, good job, Michael.
Thank you.
All right, on Logic 247, which is our 24/7 E-mini alert service, but it's not just the E-minis. We also cover gold and crude and silver. Last week, which was week 143, we ended the week with a total of 65 alerts. 13 never triggered. So we had 55 actionable alerts. And we ended up with 15% of actionable alerts stopped out. And if you'll hold for me 1 second, please. Okay, so now back to where I was. Here I is. Okay, so now in the alert channel, which we're now in week 144, since last night at 6 p.m. Eastern, when the markets opened, most traders think of trading and Wall Street and all that jazz as being something that happens Monday through Friday from 9:30 a.m. to 4 p.m. Eastern. But if you're a futures trader, you understand that we are now in a market that is truly global markets, and the Globex session opens every evening at 6 p.m. So our alert channel opens Sunday night, 6 p.m. Eastern, and then it remains open around the clock till Friday afternoon at 5 p.m. Eastern. And so this is how we finished last week. That's not a typical number. Typically, 20% of alerts are stopped out based on not risking more than $300 per contract per trade, less when possible, using market structure and a very simple 3-step method that we teach all of our traders. Since the market opened last night at 6 p.m. Eastern, we've issued 9 alerts, 2 never triggered, still waiting on the outcome of 1. That gave us 6 actionable alerts. We had 1 stomp out, that's 17%, based upon, again, not risking more than $300 per contract per trade, less when possible, using market structure. Okay. Now, we also have, and I think I said it, but I'll say it again, over the last, we're now in week 145. We're in week 144. Okay, over the last, well, since today's Monday, we'll say over the last 143 weeks, well, whatever, 7,294 individual alerts, all issued with plenty of time for you, the trader, once the alarm sounds on your phone, your tablet, your PC, or your Mac, for you to get to your computer, get your thinking cap on, get your trading cap on, study the alert, and then study the chart. Because when I publish an alert, that means a window of opportunity has presented itself. And our goal is not to just give you alerts to trade so that you can make money, which, of course, you're certainly welcome to do that because that's your passport, and it is a lifetime passport. But really, our goal is to teach you how to spot these windows of opportunity yourself. There's nothing magical. There's no secret. There's math. There's price flow. Price flows, by the way, on a monthly chart the same way it does as a 1-minute chart. You've heard it probably said that markets are fractal in nature, but nobody ever took the time to explain to you what that means. What does that mean, the markets are fractal in nature? Well, I just said it. Price flows on a 1-minute chart from support to resistance, back to support, back to resistance, over and over, again and again. And it does the same thing on a monthly chart, or a weekly, or a daily, or a range, or a volume chart. Probably one of the best kept secrets on Wall Street. And if they just came right out and told you that, they wouldn't be able to sell you all this stuff. All these millions of indicators and oscillators and strategies. And, I'm not knocking anybody else's indicators. MACDs, stochastics, RSIs, they've been around forever. Do they do what they were created to do? Absolutely. I take no issue with that. There's the trend, and there's the tricks, and there's the advanced decline line. Okay, are those all real things? They are. But does any of them in any way change the fact that price flows from support to resistance, back to support, over and over, again and again? No, it doesn't. So our methodology and our strategy, while for the person who's been struggling to learn how to trade for many years, who has spent tens of thousands of dollars on all kinds of stuff, it just seems impossible that it could be that simple. But yet it is. And we have proof that it is. Michael proves it every day in the live training room. We have over 16 or 1,700 daily shows archived. This show that we're doing right now, we archive each daily show on our YouTube channel, youtube.com/CFRN. And if you go back a week, a month, a year, 2 years, pull up any show at random, you'll see he and I both using the same language, same indicators, same principles. Nothing has changed. Because the market, the nature of the market, the principles upon which the markets operate hasn't changed. And that's what makes our strategy unique. Even though it's simple and elementary, it's the simplicity that matters, because instead of trying to outthink the market, outrun, outdistance, we don't. We teach you how to simply do what the market's doing. This will sound silly to those who've struggled to learn how to trade, but if price is rising, our indicators, methodology, and strategy work together to help you find an opportunity to be long the market. I mean, price is rising, you do want to be long the market, right? Price is falling, then you do want to be short, right? And that's what our very simple methodology and strategy does, is it helps you find a position, a high probability, low risk opportunity to be short the market. We don't know what's going to happen next, nor does anyone else. Now, lots of websites and lots of emails that you get, folks do try and convince you that they've cracked the code, that they do know with certainty what's going to happen next. But I challenge any of those folks who say that to come on the show, hang out with us. You know, I'm not trying to pick a fight in the schoolyard, but let's have a meeting of the minds. Let's find out if you really do know with certainty what's going to happen next. I know what the outcome of that will be, but the good news is here's what you can know. You can know what the next high probability move is with certainty. However, 20% of the time, the market is actually going to do something other than the next high probability thing. Why? Because order flow changes. If you get into a long position, based on our methodology, our strategy, or one of our alerts, well, it's because there is more buying pressure in the order flow than selling pressure. But that buying pressure can turn on a dime, just like you've seen a school of fish, turn left, turn right. No blinker, no turn signal, they just do it. And when you're in a long trade, because of the bullish pressure in the order flow, the buying pressure, that can change midstream. And it does about 20% of the time. That's why over the last 7,294 individual alerts across the S&P, the Dow, the Russell, the NQ, gold, crude, silver, even occasionally some ag products, even some currencies, we have historical data that shows us 20% of the time the market does do something other than the next high probability thing. So how do you know what the next high probability thing is? One way is with our weekly trading zones, which we've published since December 14th of 2009. They're published for our members every Monday morning at 6:15 a.m. Eastern. And those numbers are carved in stone for the entire week. They become fixed support and resistance. As I said, price flows, support to resistance, and back again. Our indicators serve as dynamic support and resistance. So you got two things working on your behalf: fixed support and resistance, dynamic support and resistance. And as you learn to read the chart, understand the order flow, and use our couple of very simple indicators, you can spot when the market has found resistance. You can know when the market has found support. It's then pretty simple, with a little experience, a little training, a little practice, to determine what that next high probability move is going to be. I'll show you an example. Let me go back to our discussion group, which, if you're not participating in the discussion group, which runs 24/7, 365, I encourage you to do so. Let me scroll up to the chart I'm looking for. Now, I published this back on Friday. Okay, so on Friday, I published this chart at about 6:22 p.m. Pacific. I'm on Pacific time now. Arizona doesn't do daylight savings time, so 8 months out of the year I'm Pacific, 4 months out of the year I'm Mountain Standard. But it was Friday night that I said, what did I say? I said, Sunday night, the NQ will either trade here or here. Here or here. Okay, so let's go take a look real quick at the NQ chart and see what it actually did do. Okay, now again, we had closed the week. This was the final closing candle for the NQ right at a weekly trading zone. Using market structure, we knew that there was a very high probability that price would either fill this window of opportunity or it would fill this window of opportunity. One or the other, doesn't matter which. As futures traders, doesn't matter to us if price is going up or going down, as long as it's going somewhere. And so what happened is this. Here's the here or here. Okay, one more time. Here or here. So the market was extremely kind. And here's what it did. Here. Right there. Price traded to the upside. It filled the window of opportunity, which was roughly 13,925 up to almost 945. So from 25 to 45, that's 20 points at $20 a point. It's $400 per contract traded. And that's this right here. Swing high here was 947. And the top of this window was about 942. So, market was kind. It did do. Now why did it stop there? Well, I'll give you two reasons. Previous resistance was at 956. So traders who had traded the move up wanted to take profit. Swing high was 47.5. The reason it wasn't 47.75 was because nobody, no retail trader or no institution, clicked the buy button at 47.75. If they had, that would be the high of this session. But no one did. In fact, what happened at 13,947.50, buyers basically stopped buying. It takes financial commitment for price to rise. For price to fall, all that is necessary is for buyers to at least temporarily stop buying. Sellers, those who specialize in selling, there are funds and ETFs and just traders who specialize in trading on the short side. Mike Reed used to love trading on the short side much more than trading on the long side. And so we came up through our CTA at 925 and swing high 47.5. So 22 points the market made available at $20 a point. Well, once that high was put in, resistance, remember price goes from support to resistance. Once it finds resistance, it's going to go look for support, which it found at last week's zone, which was 776/777. And it looks like the swing low here was 75.75. So it actually went one tick beyond that weekly trading zone from last week. Now we said, based upon logic, once you understand order flow, once you understand how price flows, then logic just kind of becomes common sense. Over here, buyers could not get price above 13,919.5 because nobody clicked to buy one tick higher. And so sellers came in. Buyers stopped buying, sellers come in. That's why that high was there. And that translates into this high here. So our window, simply, we wanted to enter the market above previous resistance and take our profit before the next area of logical common sense resistance. The market was kind and accommodated, both on the long side and on the short side. Now this window had a top of about 812 down to 785. So, almost 30 points. And we'll call it 25 points. So I don't have to do the math. $20 a point. That's $500 per contract traded. Now again, all of our members were given this information by people who don't know what's going to happen next. That would be us, me, Michael, Valerie, Bert. We don't know what's going to happen next. But yet we were able to tell you what the next high probability move was. And the market delivered. Is that unusual? Is that out of the ordinary? No, it's the core. It's the heartbeat of everything that we do. And everything that we do is fluid across all markets and all time frames. So going back to the daily chart, we know we had an all-time, this was Fed day, pretty small candle for a Fed day. Then we had the day after the Fed, Thursday, where we put in a new all-time historic intraday high and an all-time historic closing high. We have a support level here based off of this low, and this low, and this low, and this low. And that support is at about 41.65. If we break this support area, then that opens up this window of opportunity right down to that low, which is 27.5. The 24% Fib retracement is 23.5. The 38% Fibonacci price extension is 41.33.5. So we have so many things coming together here. The 24, the 38, the daily BBC, this low, this low, this low. When price, if price, takes out this, got about a 30-point air pocket. Is looking left. There's nothing to show us potential support until we get down to the low of this candle at 27.5, which is just above the 24% Fib. So it's an area. So we'll be monitoring this very closely from a bigger picture perspective, because a 30-point window of opportunity is certainly nothing to sneeze at. Okay. So we've got resistance overhead, today's high. Oh, 2.5. Thursday's high. Oh, 1.5. Then the all-time historic high at 201.5. And if we take out the all-time historic high, we have a 50% Fibonacci price extension overhead at 42.23, then a 62% Fib extension at 43.13. Okay, so we know what the next high probability move is based upon the structure of the market itself. We don't really need any indicator or oscillator to give us that information. We take out these highs, these two daily back-to-back highs, and the next resistance is here. If we take out this clearly defined support area, then the next area we expect support is right here. I recommend that every day, no matter what market you trade or what time of day you trade, go to the daily chart of that market, run the indicators, and do what I just did. Identify major areas of support and resistance, because as you go to the smaller time frames to actually execute your trades, some of this information won't be easy to see on the 30-minute chart. You probably won't be able to see this all-time historic high. Depends upon how you've set your chart up. how you've scaled it. So you could scrunch it up and see this high, but what you can't see from the 30-minute chart is that it's the all-time historic high, which obviously makes it a bigger deal than just a previous swing high. We are currently below blue and climbing. We're right at the step line. So this is a really important area. Okay? If we take out the low of the session at 81.5, then we would look for a drop from 81.5 down to this area at about 65, 66. Okay, that's if we take out the low of the day. So there's a little window of opportunity there. If we take out today's high, then it's a very small window of opportunity from about 42.04 up to the all-time high of 42.11. That's still 7 points. At $50 a point, that's $350 per contract traded. Now, while a 30-point trade is awesome, an 11-point trade is awesome, and a 7-point trade is awesome, never lose sight of the fact that if you can consistently take a couple of points a day out of the S&P, that's $100 per contract. And our 24/20 blueprint teaches you to start out in SIM in your demo account as you're learning our methodology and strategy, as Michael is training you every day faithfully, 2 hours a day, every trading day. He's not only teaching you, he's putting on and taking off trades, and he's answering your questions about everything he says, every move he makes. You cannot learn how to trade simply watching videos of people trade or just watching people trade. Just like you can't learn how to swim watching other people swim. I mean, you can get some good ideas about how the whole process works, but until you get in the pool, get a little water in your nose, maybe swallow a little water, right, and start kicking for survival, that's when you learn how to swim. So we definitely want you starting out in the demo account, because the goal here is you're done blowing up accounts. You've had enough of that, right? We want you to put together 10 consecutive days in a row where you reach your goal, 10 trades or less. Then our blueprint will give you the green light to go live with just one contract. Now your goal, trading real money, is to increase your account balance by $2,000. Once you do that, you'll get the green light to add a second contract. You're adding the second contract with profit you earned in the market trading one contract. The blueprint will let you know when it's time to add number 3, number 4, number 5, number 10. But you never add more than one at a time, and you only add additional contracts with profit you earned in the market. If the blueprint's telling you it's time to add a contract, and you don't have profit available to underwrite or fund that contract, and obviously the last thing in the world you want to do is increase your trade size if things are not going well. When you find yourself in that situation, you simply hit pause on the live account, log back into the demo account, immediately book a one-on-one mentoring session with myself or Michael or Valerie or Bert, any of us, all of us, so that we can go over your trades with you, walk you through each and every one of them, and help you figure out what's going on. Trading's such a lonely business. And a lot of the only interaction that many traders have is some of these dark and dreary places like Raging Bull. I'll go ahead and call the name. I mean, if you've never been there, certainly don't recommend you go there, but those kind of places are a dime a dozen. Everybody's angry, everybody's bitter, everybody's got a chip on their shoulder. They're going to call you. If you do good, they're going to call you names. If you do bad, they're going to call you names. There's more hate speech in some of these chat rooms and forums than you'll ever find at one of these protests or demonstrations. Our discussion group, on the other hand, which is open 24/7, 365, you'll find nice people. We are a community of believers. And everyone in that channel is at some point on the journey, the same journey you're on, learning how to trade. Some have been with us years, some weeks, some days. You will, if you, come out of your shell and introduce yourself to the community. Hey, I'm Joe from Idaho. I've been trading for a while, and you can be as open as you want, okay? But what you'll find is a supportive group of other traders, many who are standing in your same shoes right now, and others who once stood in your shoes. I'm always amazed when I see our traders reaching out to help the new guy. All of our traders use the same methods, same strategies, same indicators. There's never any arguments over, which way is better, because we only talk about one way. Now, we're not saying that our way is the only way. Well, that would be silly, because there are many ways to trade the market. We do believe that our way is the simplest way, at least the simplest way I've ever seen. And I've seen a lot of stuff since I started trading futures in 2005. So, complicated and expensive does not equal better. If someone who has a pocket full of money has an opportunity to buy a $5,000 system or a $50,000 system, I hate to say it, but the person with the pocket full of money is probably going to err on the side of the $50,000 method, only because if it costs more, it must be better. Well, some of you know from experience that simply isn't true. Now, we've identified where major resistance and major support is. Now we can go to our smaller time frames, and we'll also go to our concierge trade alerts, our original alert service, which I'm going to share with you right now, CTAs, and that's part of the passport. The passport that we offer, that includes everything we do, everything we've ever done, and anything we might do in the future. Whereas the logic alerts come out around the clock 24/7, the concierge alerts, this is a static report published once per session, shortly after the Globex open. Each market has two numbers. So last night I got them published at 6:25 p.m. Eastern. As you can see here, this is my time, 3:25 p.m. Pacific. Telegram is the messaging client that we use to communicate with all of our traders. We have 5, 6, 7, 8 different channels for different purposes. Whatever time zone you live in, that's the time that Telegram is going to show. Telegram reads the clock on your computer. So if you're on the East Coast, then this would actually say 6:25 p.m. So what do you do with these numbers? Well, my recommendation is that you go to each market, at least the ones you trade, and draw a line in the sand. Okay? Draw a line at 4203, draw a line at 4173. If price, once this is posted, if price starts trending up towards 4203, that's bullish. And so logic will begin looking for opportunities to buy the dips. If price starts trending down towards 4173, that's bearish. So logic will start looking for high probability, low risk opportunities to sell the rallies. Trading's not easy. It can be that simple. Price can only do three things: go up, go down, or consolidate sideways for a period of time. And we've seen a lot of that here over the last few weeks because we are at all-time historic highs. And does the market still have another leg left in it? Or do we need a deeper retracement to fuel that next leg? Well, nobody knows with certainty. And so that's why I use this analogy, I think last week a couple times. It's like horses in the starting gate. Happy Kentucky Derby Day yesterday, or Saturday, whatever that was. The horses are in the gate. They're nervous, they're flinching, they're snorting, they're pawing. And nobody knows for sure. Even though their website might say they do, they really don't. And so there's a lot of nervous energy there. The market tries to move higher, but not enough traders are committed to truly take it higher. And so then the market starts to dip. But those that weren't so sure about going along sooner, now suddenly they're motivated to go long and buy that dip, and so it pushes us right back up into that area. And it just consolidates sideways, sideways, sideways. If you want to grab a screenshot here, do this because we're going to walk through these. 5, 4, 3, 2, 1. Okay. All right. So we'll go now to our 30-minute chart of the S&P. And by the way, if you don't have a passport yet, a lifetime passport with access to everything we do, just go to eminifuturestrading.com. It's that simple. Once you purchase your passport, Valerie will then provide you with all the information you need to get into the groove. All of the Telegram channels, the invitations, how to set up your demo account, simulator, how to get your indicators up and running, everything that you need. She's there to help you through that process. Basically, it's all done in an afternoon, which means if you grab your passport today, you could be in the alert channel with us trading tonight when the Globex markets open. Okay. So let's go first to the 30-minute chart of the S&P, where I have already put in the CTA numbers. I'm going to do something a little different with the CTAs this week based off of that workshop we had last Thursday night. Now, this is a good example of that sideways movement that we've been talking about. 4203 was the CTA on the long side, which obviously we've not triggered yet. Swing high was 4202 half. The CTAs will either act like an iron curtain and turn price and send it back in the opposite direction, or it'll swing wide like a gate and allow price to make its move up to the next area where we anticipate resistance, which in this case would have been the weekly trading zone overhead. Now that's last week's weekly trading zone. The zones are published Monday morning, 6:15 a.m. Eastern, since December 14th of 2009. On Sunday nights, we're still using the previous weekly zones, but the previous weekly zones continue to hold sway over the market in the early part of the week. So you can do a couple things. You can color code the previous week zones. I turn mine yellow. And this zone here is 4215/16. I used to put both lines, but I like for my charts to be as clean as possible. So I've started just doing, one line. So I did this in a mentoring session last week as I was explaining this process because someone had been looking at older videos where there was two lines at each zone, 4189/4190. Okay. All right. So neither one of those triggered. Everything in between these two lines is the market making up its mind. On the daily chart of the S&P that we just looked at, we're not having an inside day because the high is 1 point higher than Friday's high. 4201.5, today's high. 4202.5. Okay, so by 1 point, we're not an inside day, but we've got a pretty small body candle, or a pretty small candle compared to Friday and Thursday. Now, last week, heading into the Fed announcement on Wednesday, we saw 3 days, 1, 2, 3, of the market just coiling up, waiting for that Fed announcement, waiting to hear if there was going to be something said that would have long-term ramifications. Surprisingly, it wasn't until Thursday that we saw a reaction to the Fed. So going back to the 30-minute chart, let's just scroll through the logic alerts real quick. There aren't that many of them yet because it's early in the week. Go. So, silver, we had a long 26.10, initial target 26.12. The initial target is always $100, whether it's gold or silver. The only exception is the NQ because of its volatility. The initial target on the NQ will be $200 per contract. Now, silver has traded well above 26.12, but at the time that Valerie did the recap, okay, price had reached 26.12. Now, it got a PT designation versus just the full thumbs up because at the time the swing high was 26.12 on the nose. That means some people got filled. If you had a hard target at 26.12, if you're at the head of the line, you got filled. If you're at the back of the line, you probably didn't get filled. Had price ticked up, which at the time she was doing the recap, if price had ticked up to 26.13, then that would mean everybody who had a hard target at 26.12 did in fact get filled. Okay. So, and as you can see, this is now alert number 7,294. Previous alert was to be long gold. B is buy. T is an initial target. There's that $100, 76 to 77. And then we had potential resistance or a second target at 78. And then we had a weekly trading zone, 1780/81. Now, every alert has a final trade to target. On a long trade, it's the zone above. On a short, it's the zone below. We had a hedge on the S&P that never triggered. If and when it does trigger, 41.73, initial target 71, and we have potential support at 41.70, which is a previous weekly zone, and then potential support at 41.68, and then the final trade to target is that weekly zone below at 60.61. Again, on Sunday nights, we're using the previous weekly zones in the alerts because the new weekly zones don't come out until Monday morning at 6:15 a.m. Eastern. So we have 1 target, 2 target, 3 target, 4 target. Price is always trying to get to a weekly zone. This is what helps you to understand what the next high probability move is. Because if price is above the BBC, it's trying to get to the zone above. If price is below the BBC, it's trying to get to the zone below. Very simple. You can learn how to do this. How many methods, strategies, indicator packages have you purchased in the past that never really got any use because you never quite really figured out how to use it? Or you could never come up with the same kind of results because you didn't understand how to properly use it? That's why Michael and I work very, very hard to make this as simple as we possibly could. Okay. Then we had a long on the S&P, 4187 to 4189. Now, that's only a 2-point move. On a 2-point move, you can only risk 2 points. You never risk more than the potential profit in a trade. So on a long trade, from the entry to the weekly zone overhead, that's the potential profit in the trade. On a short, from the entry to the weekly zone below, that's the potential profit in the trade. We never want to risk more than $300 per contract per trade, less when possible. Okay. In fact, this is a good example. The entry was 87, but the zone overhead was 89. I had a feeling price might go higher, but I've got to stick to the format. And so I had to cap it at the weekly zone above. 41.89, it actually ran to 94.25. So from 87 to 94, that's 7 points. At $50 a point, that's $350 per contract traded. So if you've earned the right to trade 2 contracts, it's $700. If you've earned the right to trade 10 contracts, it's $3,500. But I can't stress enough the importance. No matter how long you've been trying to learn how to trade, whatever it is you've done, whatever it is you've tried, has ultimately brought you here. So don't just dive in with a fistful of contracts and start clicking the mouse. It will not end well. Put in your, if becoming a consistently profitable trader is that important to you, if it's truly important, as it should be, then do what's required to get there. And 10's not a magical number, but it's a good number. It's 2 weeks, 5 sessions per week, Monday through Friday, about Sunday night. If you can't put 10 consecutive days together in a row where you reach your goal in Sim, what's to make you think you can suddenly do it if you just go live? Well, I had no good answer for that, so I just did. When I struggled being consistent in the simulator with one, I thought, well, going live will fix it. Well, of course it didn't. This is going back to 2005. Okay. All right. I probably just don't have enough skin in the game, so I'm live with 1. I'm not doing so good. I should probably up it to 2, because then I'll do better. How faulty can a man's thinking get? So when 2 didn't cut the mustard, what about 5? 10. 20. The market has a way of ultimately bringing you to your senses. Okay? All these websites and all these empty promises and all that stuff can send you down some dark roads. But the market itself and your account balance will quickly bring you to reality. So no matter how much experience you have, please, I encourage you, do the 10 days. Go live with just 1. Stick with 1 till the blueprint tells you it's okay to add a 2nd and a 3rd and a 4th. Okay. Now, I'm not saying you could never blow up an account with us, because you can. But if you follow the blueprint, if you follow the rules and the principles and all those things, it'll take a while. In fact, you'll have to break a lot of rules along the way. Because if you ever have 2 negative days in a row once you go live, you immediately go back to your Sim account, book a mentoring session so we can figure out what the heck's going on. When you see the little Z's, that just means it never triggered. So no trigger on silver, no trigger on gold. Here's a short on crude oil. Again, it was only a $100 per contract trade because we had that weekly zone right below us. We had to stop out on the NQ. Not because the NQ didn't trade lower, it did. We'll take a look at it in a minute. But getting stopped out is as much a part of trading as breathing is a part of life. So we had 5 weeks in a row where the first alert Sunday night got stopped out. After 100 and however many weeks of the first alert reaching its goal, I just thought I wanted to look really closely, and then I chose a market that I was pretty confident would be able to make it to its target. And it did by, at the time, the goal plus a couple ticks. So we are in week 144. You just saw everything we've done so far this week since last night at 6 p.m. Eastern. And we've already looked at last week's recap, which was a total of 65 alerts, of which 15% were stopped out. All right, so now we'll go back to recapping those CTAs. And I'm doing it a little bit differently this week based upon the workshop we had Wednesday night. All right, we've covered this, and we know, now this is where the market opened last night, okay? And our CTA was 41.87, the 41.89, that weekly zone, and then it continued on up. Now we know that important prices, important areas are almost always tested. So if we draw a line across here, show you what that means. Not all triggers, though, are created equal. I'll show you what that means. So there's 41.87. Okay. So we actually sliced through the zone on this candle. So you may have just, had a hard target set, took your 2 points, done for the day. Yeah, I said done for the day. If you want to take 3 points, 5 points, 10 points, 20 points a day out of the market, absolutely you can. The market gives you lots of opportunities. However, just remember that if you want to build your trading business, simply 2 points a day, you can do that. It takes a little patience, a little self-discipline, but 2 points and the S&P is $100 with one contract. Obviously, if you're only adding one at a time when it's time and only adding with profit you earn in the market, it's going to take a while for you to earn the right to trade 10 contracts. But if you're willing to put in the time and effort, the patience and the self-discipline, by the time you've earned the right to trade 10 contracts, then those 2 points is worth $1,000. That's just simply a function of math. And if you're able to consistently do that, on average every day for an entire year, that puts you in the top 3% of wage earners worldwide. I forget who published the article recently, Time, Newsweek. They listed the highest paying professions, and I think for the first time ever, I don't know if trader was even on the list before, but somebody posted it, one of our traders posted it in the discussion channel, a copy to the article. Trader was listed as the highest paying profession of all. So, before we can concern ourselves with all that jazz, we've got to learn how to identify with a high degree of probability, with certainty, what the next high probability move is, while understanding that 20% of the time, market's going to do something other than what we thought it was going to do based upon our methodology and our strategy. So we break through last week's zone. We pull back, get below the trigger. We trigger again, and we put in a high at 88.5. Okay, so we did 2 points plus. What we say it was 7 points ultimately, but the zone is the final trade to target. Now we did it again over here with gusto, but this is what I mean about not all triggers created equal. On this long move, we had the support of blue and climbing. Step line was on the left side of blue and climbing. So those are very bullish conditions. Fortunately, we had a weekly zone just right overhead, which we have to believe is going to be good resistance until proven otherwise. So price comes back below the trigger, but this time we've got this red and falling issue to deal with. Now, in order to go long, price has to be above the BBC, and we want the support of blue and climbing. Whether or not you would have taken this trade, that's going to depend upon your business plan, your trading plan, really. And that's part of what the passport includes, is a format for creating both a business plan and a trading plan. 9 out of 10 traders fail. 9 out of 10 traders don't have a business plan, and they don't have a trading plan. They got some indicator, some oscillator, some clever thing that they found on the internet, but they're not treating it like a business. The more you treat it like a business, the more it will behave like a business. And in all businesses, there's ups, there's downs. So when the market runs out of steam at 99.5, it comes back to the BBC. Price always reverts to the mean. On the 1 minute, the 5, the 30, the weekly, the daily, the monthly, price always reverts to the mean. And in our case, the mean is green, and we call it the BBC, bull bear cross. When price crosses below it, like this, we're bearish. Leg, a retracement, a leg, retracement, price reverted to the mean, then drop. And on Friday's show, we put in this little rectangle, as you'll remember, and live in real time, we identified the window of opportunity. It was 41.74, I believe, down to 41.72. Okay. We did it. We did it again. We did it again. If you missed Friday's afternoon broadcast, this broadcast, just like we're doing now, you can go to youtube.com/CFRN and you can watch us. We actually even published an alert. I typed it up, sent it out in the channel. 41.74. In fact, I've got the trade right here. Let me find it. There it is. Okay. So, and again, if you can go and watch this live in real time, I think it'll be beneficial. Entry was 74. And in Friday's show, I explained the reason why 74 is the entry. Initial target, always $100, except the NQ, $200. Second target was 41.70, previous weekly zone. And then the third target was 41.68. And then the final trade to target, which we did not reach, was 41.60/61. So from the entry at 74 to 72 to 70 to 68. And so the first trigger took us down to 41.67 and a half. Remember, the third target was 41.68. We made it 2 ticks beyond that. Price climbs back above the trigger, and then we trigger 41.74 again, and we make it down to 41.70, and then we get back above the trigger again. This time we make it down to 67 and a quarter. What we didn't do is we didn't make it to the weekly zone, 60.61. So you could have taken 2 points, 4 points, or 6 points. Once, twice, 3 times. Whenever I say important prices, important areas are almost always tested, this is exactly what I mean. Okay? Once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. This is a long CTA. Let me get back to my CTA channel. There we go. And so the idea of the CTA last night, or I'm sorry, not the CTA, but the logic alert, was to buy 41.87. And so it did it. These triggers here are not valid because you got red and falling overhead. Now you might say, well, I still got room to get to the zone before I hit red and falling. And you do, but just the appearance, blue and climbing has turned to red and falling. Okay. That means buying pressure has gone from bullish to bearish. Price walks sideways, and this step line goes from the left side to the right side. Okay? That tells you price is trying to work its way back to the BBC. Price always reverts to the mean. So then we put in this swing high, and back we come to the BBC. Now, on this trigger, we can't take that trigger because the BBC is overhead, and we expect that to be resistance until proven otherwise. Well, we got above the zone, we got above the BBC, we got above the zone, we got above the step line. When blue and climbing is directly above price, it can act as resistance. On a move like this, where the step line is to the left side of blue and climbing, that's bullish, that's what we want. But then when you get to a situation where blue and climbing is, instead of being alongside price, directly over price, you gotta figure it's going to be resistance until proven otherwise, which means our traders who understand our methodology and our strategy might have elected to go long once we got above blue and climbing. Okay, now the swing high here, 94.5, a long at 92.5 would have given you an opportunity to get your 2 points for the day before you hit this potential resistance. That high is 94.5. That high is 96.25. It's almost another 2 points. Okay, and then from this high, 96.75 to 98 to 99.5. Okay, so as this move is coming up. We expect resistance here until proven otherwise. Why? Because remember, when price ticked up to 98, nobody wanted to pay 98 and a quarter. So we have to anticipate that's going to repeat itself. See, we went one tick over. Always be suspicious of that one tick over. And here we went a couple ticks over. But what did price do? Did what it always does. Came back to the VBC, where it found support, which is what we expect. And then it almost made it to the CTA at 4203, but not quite. Iron curtain. Okay. So price has gone from last night's logic alert at 87, triggered multiple times, but not all triggers are created equal. Okay. We've just dipped below the trigger here, but I'm not interested in this trigger because I got the zone right here. I can't buy when I'm below the BBC. I don't want to go long into the face of red and falling because I know that represents resistance. However, I do have a window of opportunity. High of this candle is 93.75. And so from 95, make it 96 if you want. 95 half. I want to be in. And then I have to expect that this is going to be resistance. So I'm going to set my entry and my target. Call the entry 4196, 4200. That's a 4-point window of opportunity if price can overcome the BBC and red and falling. What if it can't? Okay, remember, as futures traders, we don't care if the market moves up or down, just not fond of sideways. Sideways is what we have. Okay? And so from here at 85 down to this low at 83, you could justify a trade perhaps, but it's certainly not one I would put out as an alert. Okay? I only want to provide you with the highest probability, lowest risk trading opportunities that I'm capable of finding. Okay? Now, on this retracement, we overshot the BBC, but we stopped right there. Why? Well, here's why. A bullish cross that leads to a substantial move, and I think we would agree that from 41.83 to 94, that's 11 points. I'd call that substantial. When a bullish cross leads, or bearish cross, leads to a substantial move, when price revisits that area, it was a bullish cross expected to be support. And then this support begat that support. Okay. Now, is this support because of that? It's a distant cousin. This support is because of this support. And this support is a direct descendant of this bullish cross. Okay. Now, does that happen 100% of the time? No. Rarely will you find anything in the world of trading that is 100% every time. Important prices, important areas, almost always tested. Not always tested, almost always tested. 20% of the time, based on the last 7,294 logic alerts, tells us 20% of the time the market's going to do something other than what we anticipate. Now, those 7,294, those are just the logic alerts. That doesn't include the CTAs. Okay? Now, the CTAs were our original alert service. We've been publishing, we had a 3-year public beta. We've been publishing them total 70 years, I guess it is. I guess going back to 2011, maybe even a little before. So, the short CTA last night was 41.73, which also happens to be the short side CTA. Now, this weekly zone is now 2 weeks old. Okay? I left it on all last week. Why? Because it continued to play a huge part in market structure. There it is again. There it is again. So whenever you see a yellow line, a yellow WTZ, that means it's from a previous week, or it could actually be a couple weeks. Okay? So if price is unable to overcome these obstacles and give us this window of opportunity, and if price starts to drop, we have to expect this area to be good support until proven otherwise. The first time it was because of the bullish cross. Second time, just because of that. And so if we come down again, it'll be because of that. Now, if price can overcome those obstacles, support, then we have a nice big window of opportunity down here, which leads us to the short side CTA. Okay. Now, it's difficult to define this window until price actually gets there, because what we teach is fluid across all markets and all time frames, but it's based on market structure. Because I'm not psychic, I don't have crystal balls, I don't know what the market structure is going to look like when we get down here. So we have to be patient. What we do know with certainty right now is that we don't have a trade right now. We got last week's zone overhead, potential resistance, red and falling, potential resistance, BBC, potential resistance. That's resistance times 3. The market proves itself. It can overcome all of those, can overcome this swing high. This swing high was 93.75. It's about right there. Okay, I don't want to see price just get 1 point above it. I want to see it go, at least 1.5 points, right? Now, if I consider myself to only be an S&B trader, my work's cut out for me. I have no ability to move the market. This is where I pull patience and self-discipline out of my trader toolbox. Make a sandwich, walk the dog, calisthenics, practice mindfulness, read the Bible, work on whatever other project you have going on in your life. Okay? Because you're not going to trade the S&P for a while. Price has to get up here or down here before our methodology and strategy is going to recognize a window of opportunity. The beautiful thing about our methodology and strategy is that we use exactly the same thing to trade the Dow and the Russell, the NQ, crude oil, gold, and even silver. So if I don't have a window of opportunity on tap right now, I can, as I just said, wait. Nothing wrong with that. But if I understand that everything is fluid across all markets and all time frames, I can go to a different market, like the Dow. Is the Dow currently presenting me with a window of opportunity? Nope. The CTA last night for the Dow was 33,990. So we had that iron curtain effect right here. Price tried and it tried and it tried. It could not get through that wall. So that's called resistance. When the market finds resistance, it will then go look for support. Price always reverts to the mean. That means a pullback to the BBC, which we expect to be good support until proven otherwise. Okay. Look at this leg coming off of Friday. Then a pullback to the BBC. And then a leg, pull back to the BBC. And this, yes, we spiked it. Yes, this was a red candle. But before the 30-minute period was over, price was back above the BBC. So the pullback held. We spiked it, but it held. Another leg, another retracement. Another leg, lots of consolidation. Now, are we going to get a retracement to the BBC, or are buyers going to try to run it from here? I don't know. What I do know is this is not a window of opportunity that we will trade. Of the 7,294 alerts in the logic channel, every one of those is a trend trade as defined by our indicators, the BBC and the 30-minute chart. When price is above the BBC, logic is only going to look for opportunities to buy the market, like we did last night here. This pullback, opportunity to buy the dip, opportunity to buy the dip, buy the dip. This counter trend trade, some people love counter trend trades. That's their bread and butter. It's what they specialize in. I believe that a trend trade gives you a higher degree of probability with less risk than a counter trend trade. So all 7,294 alerts are trend trades. And it's all public information, so at any time that you want to go through and take a look at it and whatnot, please do. So here, our patience and discipline comes into play. We wait to see price pull back. If it holds and we start printing green, we'll look for an opportunity to be long. If buyers come in here, we have to expect the step line to be good resistance, because the BBC is now directly overhead, resistance. Last week's zone, resistance. This swing high, resistance. Goodness gracious, will there ever be another trade on the long side? Maybe. From about 34,125 to 34,150. So 25-point trade at $5 a point. $125 per contract traded. If we drop and get back below the trigger, then we may get another CTA trigger. Okay. Now, this CTA from 990 to 340.90, that's 100 points at $5 a point, $500 per contract traded. Next on, and of course the short CTA is way down here at 33,765. I'd be very surprised to see that trigger in today's session. Okay. Remember, everything in between the CTAs is the market making up its mind. Who's more committed, buyers or sellers? Is there more buying pressure or selling pressure? Obviously, since the open last night on the Dow, there's been more buying pressure. leg, retrace, leg, retrace, leg, retrace. And you know where so many new traders will make the mistake is they'll attempt to buy the market here because it's running as opposed to buying it here where it's starting to run. This is a big move. Market's tired, looking for a little rest. Pulls back, then it runs into red and falling. So we pull back again. Muster up some strength. There's the London Open, 3 a.m. Eastern. Okay. And when that ran out of steam, look left. Where it ran out of steam. Back to the BBC. Do it again. Back to the BBC. Do it again. This won't go on forever. At some point, the market is going to require a deeper retracement. And we'll have legs to the downside. Now, I'm going to remove this rectangle, not because it isn't a window, but it's a counter trend window. And we don't do those. Okay? Nothing wrong with them. We just choose not to. Okay, so here we are on the Russell. The CTA on the long side was 22.79, and the swing high is 22.81 and a half. So 3.5 points, $50 a point, $150 per contract traded. Price gets back below the trigger, goes back to the BBC. Price always reverts to the mean. Off we go again. This time from 79, we make it up to 83. That's 4 points, $50 a point, $200 per contract traded. And then we get back below the trigger. Support at the BBC. Off we go again. This time, 79 up to initially 87. So that's 8 points at $50 a point. And it does keep going. And then we get back below the trigger, but we don't re-trigger here. Continue lower. We had a zone down here last week at 2260/60. So price didn't quite make it to the zone. Buyer stepped in a little bit early, drove us up through the step line, up through red and falling, up through the BBC. Now, you see this bearish cross? Bearish cross became resistance. Price, this was a green candle all the way up. It's a big green candle until it got to that area where the cross took place and it reversed. It dropped 76, dropped from 76 down to 73. It's 3-point drop. Buyers aren't done. Take us back to the trigger. 79, 81. It's 2 points, $50 a point, $100 per contract traded. Here, this trigger only took us to 2279.6. Okay, and we retraced. And now we're taking another run at it, okay? Remember, we don't want to risk more than $300 per contract per trade, less when possible. Since the Russell pays $50 a point, that would be a 6-point maximum stop loss. Now, I'm going to be posting in the members area some charts kind of like the ones we did Thursday night in the workshop, where we walked through these individual alerts using that process that I showed you all Thursday night in the workshop. Now, the workshops on Thursday night are member only. When you take our trial, we treat you just like a member for the entire week. You have our strategy, our indicators, our alerts, everything, except the closed door, members only Thursday night workshop. Okay? So, as soon as you become a passport holder, a lifetime passport holder, no upsells and nothing else ever to buy again, you'll have access to hundreds and hundreds and hundreds of workshop videos, private members only workshop videos. Okay, so the swing high so far on this candle is 2280.2. Okay, it hasn't quite reached the minimum 2-point mark that we'd like to see. The short side CTA is down at 2248. Okay, all right, next on the list, NQ. We've already looked at it a little bit because of what we posted Friday night. Now again, in the discussion group, the public discussion group, we said when the markets open Sunday night, we expect price to fill this window or this window. Doesn't matter which. Either one is ample to give us our goal for the day. The market was extremely kind. It filled this window. Then it turned right around and filled that window. Very kind. Okay, the vertical line represents the beginning of the session. So this was the opening candle last night. There was a little bit of a gap higher open, but not enough to, I didn't put out a gap fill alert on it. So price comes down to 13,852, put in a swing low at 44.5, so call it 45. So that's 7 points at $20 a point. That's $140 per contract traded. And price gets above the zone from last week. Makes a run at the CTA. And we put in a swing high at 947.5. From 925 to 945. We went to 47, but just for simple math, 25 to 45, that's 20 points, $20 a point, $400 per contract traded. That's what the market made available right there. We then dipped back below the trigger. And from 25, we ran up to 36, we'll call it 35 to be conservative. 10 points, $200 per contract traded. And then trigger the CTA on the short side. We go from 852 down to the weekly trading zone below last week. Remember, Sunday night, early in the new week, we rely heavily on the previous weekly zones. So from 852, let's call it 50 and 20, 75 points, give or take, at $20 a point. $1,500 per contract traded. That's if you entered here and got out here. Now, just getting out at a swing low, that's pretty difficult to do because you don't know it's a swing low or a swing high until after the fact. However, as price was moving up, we knew to expect resistance So you either take your profit up at this area or you tighten that stop way up. Okay? Otherwise, all that profit evaporates as price is dropping. Okay? While we don't know that's going to be a swing low, we do know that's a weekly trading zone. So we can certainly elect to take our profit at the zone, because the zone below is always the final trade to target. Now price has begun to walk sideways. The step line has not crossed over red and falling. When it does, the first green candle that closes above the step line, after it crosses over, that's what we call the exit signal. Now, it appears the exit signal is going to be higher than the zone, but we don't know that. So as a trader, you have to make a decision. Are you going to stay with it, see what happens, or are you going to just take your profit? If you're short from 52, even if you just got out now, there's still 55 points, $20 a point. It's still over $1,000 per contract available in this move. A move that we talked about Friday night. Having no idea what's going to happen next. Not knowing if the market's going to open Sunday night to the upside, to the downside, or sideways, which it did for a while. But market structure tells us where the opportunity lies. Okay. All right, next on the list would be crude oil. Remember, the yellow lines are previous weekly zones. The gray lines are last week's zones. Probably by tomorrow, I'll put this week's zones on the chart for the purpose of the radio show. Now, we're coming into a window of opportunity right here on crude. 64.60. How about 64? 64.57. 64.67. Don't really have time to type it out. 64.57. 64.67. 64.57. We have to expect that that high will be a resistance until proven otherwise. This candle tried to get to the zone. This candle tried to get to the zone. We got a high and we got a lower high. Now, see that one tick wick on top of that candle? That candle was green for a tick. And then sellers slammed it, right? So I don't want to enter right there. I want to get a little bit above it. Okay. So the CTA last night for crude was 64.05. $64.05. Okay. Now what I'm going to do, instead of WTZ, I'm going to make it say CTA. Here, I'm going to make green. And I'm not going to hit save as default because when I drop a horizontal line, I want it to be a WTZ. Once I've put these CTAs in place, then each day, all I've got to do is drag them into the new position. Okay? So whatever the CTA is tonight, when I publish, I'll just grab this. I'll drag it wherever the new long CTA is. Last night it was at 64.05. Okay. From 64.05, we only, now what's the low here? The low on this candle, 64.06. We did not get a second trigger. We would have had to come down 2 more ticks, qualify for a second trigger. Of course, once you understand the methodology and the strategy, then that's not that much of an issue. You understand what price is doing. Okay, because this was a red candle all the way down, 64.06. Then buyers came in, drove it back up 40 points, or $400 per contract traded. So that's the long side, 64.05 up to, well, just the first candle took us up 30 points, $300 per contract traded. Swing high was, we'll call it it's $600 per contract traded. CTA entry, swing high. Again, getting out of the swing high, it's difficult. Now, I usually show you the examples of where the exit signal was very beneficial. This is how it works. Just this one, it prevented you from giving it all back, right? See how the step line starts out on the left side? Then as price walks sideways, the step line crosses. So on a long trade like this, first red candle that closes below the step line, after it crosses over, and some would argue that on this candle, it hasn't crossed over yet. It's crossing over. The rules say once it has crossed over. So some would argue that there is no exit signal yet. I'll let you decide. Rules are, on a long trade, after the step line crosses to the right side of blue and climbing, first red candle that closes below. So was it this candle or not? You decide. Okay. By the book, I'm going to have to say no. Even though that goes in favor of the trade, I'm just calling it as I see it. All right. And the short CTA for crude last night was 63.40. So drag it into place. And change it to say CTA. And I'm going to make it red. Okay. This is where the session started. This was the opening candle. We had a slightly higher gap open last night. We had a bullish cross, which didn't take us too far. We had a bearish cross, which did give us a pretty substantial move. Now, from 63.40 to the weekly zone below, which was 63.25/30, that's only 10 points. It's only $100 per contract traded. That's what the market gave us. Now, we did trade through the zone, and we did put in a swing low down here at 62.90. So, all told, about a $400 per contract move. But from the entry to the zone, $100. Then price gets back above the trigger, triggers again, and it hands over another $10 or 10 points, which is $100. And then it does it again. Okay. Now, we got blue and climbing up here. Okay, this was an unusual move. Price is below the BBC. Now, when we're going short on a CTA or a logic, I mean, we're shorting, we want red and falling, right? That's Friday, though. We got it over here. So we have red and falling. That's what we want. This was an outlier. I don't know if you would have taken this or not. I would not, because I want red and falling, not blue and climbing. This was just an overshoot or a spike or whatever name you want to give it. But price did go basically from zone to zone. About, that's a $1,500 move from zone to zone. All right, next on the list, gold. And gold really got to move on today. Have to rescale so we can contain it all. All right, the CTA number last night for gold, 1776. CTA. I got it in 1776. Okay. And I'm going to make that green. So here's where the market opened last night. This was the opening candle. Got a bullish cross, leg, retracement. Price always reverts to the mean. Leg and a retracement. And when price can't complete that pullback to the tick, that's an indication how much buying pressure there is in the market. So on the first trigger, it took us to the zone overhead at 1780. It's $400 per contract traded. We then get back below the trigger, and it gives us another $400 per contract traded. And then it keeps going and going and going. It even gets up to the next zone and then above the next zone. The swing high so far is 1799. The exit signal, step lines on the left side. Step line crosses over. This is a long trade, so we're looking for the first red close below the step line. So that's really it, but just to be conservative, we'll call it 1791. So from 76 to 91, 15 points. If I did the math right, that's $1,500 per contract trade. Short side on gold last night, 1762. Which we did not reach. So double click it. Make it say CTA. Turn it red. And it will serve us all week. Tonight I'll just have to slide that into position. And if you want to use your horizontal line tool the way that I do, just drop a horizontal line anywhere. Double click it. start at the bottom where you establish what you want to show. You want to hide it? Well, no, I just put it on. Do you want to show the price? Do you want to put some text in there? Or do you want the price and some text? That's what I want. Now I get to choose my font, size, bold, italics, all that kind of stuff. Do I want the information, like where it says WTZ and the price, do I want that to appear above or below? Up, lower. My default's lower. Okay. And once you've done all of this, like if you're going to use this as your weekly trading zone tool, then click Save as Default and click Close. And so every time I drop a horizontal line, it's going to say WTZ and it's going to have the price of wherever I put it. Okay. And I've only had to do this once for each market, but these lines will serve as my CTA lines from here on out, because whatever the new number is tonight, I'll just slide it into place. Last night it was 76. Okay. So triggered on the long side once. First move, 76 took us up to 80, $400. We already discussed that. Then we got back below the trigger. Triggered again. Once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. So what's most likely to happen here? Okay. Well, obviously gold's very bullish today. We would be best served if price would drop to the BBC, find support, then we would have a nice, window of opportunity to trade up to the upside. But if buyers and sellers continue to duke it out right here, then we don't have a tradable window of opportunity until 1798. And I'm not even crazy about that. But again, we can't say for certain until price gets there, because it's based on market structure, and without crystal balls, I don't know what the market structure will be when price gets there or when price gets here. One market left. And what a doozy. That's a technical term, doozy. This is silver. When silver moves $1 in price, like from $26.10 to $27.10, that's $1,000 per contract. I'm sorry, $5,000 per contract. If you're trading this contract, not the mini, not the micro, the regular sized contract. Silver's volatile, margins are high, you have to be very careful. Now, on this move, that would be the exit signal. 26.10, 27.10, $5,000. That's the story on silver. The short side, the short CTA, is 25.84. And also doing the CTAs this way is going to make this whole process so much simpler each day. We'll be able to get through each daily broadcast, because instead of me having to draw the line in, I just got to drag it into the new position. So I look forward to that. So we wanted to say CTA. Red. This is the CTA acting as that iron curtain, turning price up, bullish cross, only one trigger, and what a beautiful move. As you know, since the end of last year, I've been very bullish on silver. I've been bullish on it for years, but super bullish. I said on this show many times that I thought by the end of March, we'd be at $50 on silver. Obviously, we aren't. Will we ever have another chance to buy silver at 25? I don't know. I do believe that once we get above 30 and hold the pullback, I think we'll make a rather rapid run up to 50. Silver has been to $50 twice in the history of man. Both times it got turned away. I believe this time up, there will be some resistance, but I believe the market will ultimately break through silver, and if it can hold the pullback at 50, we could see 75, see 100. There's all kinds of forecasts out there for extraordinary prices. Try to keep things in the realm of reality, but the market's going to do what the market's going to do. And the market's always right, which is why our methodology doesn't try to outsmart the market. It just follows the market. Like last night. If price can get above 26.10, we expect that it can go substantially higher. I even published last night, and I haven't done that in a while, weekly trading zone, silver. Did I not publish on it? No, I did. You gotta be kidding me. Oh, I did. Come on. Just gotta scroll down to the right spot. I got lost. This week, we have a weekly trading zone for silver at $26.99. We've already blown out the highest weekly trading zone for silver. So, what does that mean? It means either I really got it wrong, or we're going to see a pretty mean reversal. The next zone below that is 26.48/49. And below that, 26.48. 26.24. All right. And this marked the beginning of the session last night. So we had a bullish cross, price pulled away, price pulled back to physically touch, up, close. And notice we never closed below step line. Down the sideways walk, we got the official exit signal. And extraordinary, but we're already at the highest weekly trading zone this week for silver. Does that mean it can't go higher? Oh no, it can. And it very well may. Let's see what happens on this retracement. This retracement holds, then we would expect a rally back up to this area. If the pullback to the BBC does not hold, then we'll expect a drop to this zone and then this zone. Okay. All right. If you still do not have your lifetime passport, which gives you access to all of this and so much more, Go to eminifuturestrading.com. Get yourself signed up. If you have any questions, call Valerie 949-42-EMINI or email us support@cfrn.net. It's basically self-serve. When you go to that web address, eminifuturestrading.com, just click the buy button, take care of the payment. We do accept all forms of crypto as payment. So however you want to pay your bill, that's just fine with us. Valerie will get you all set up, indicators and all the links and all the invitations to the different channels, everything you need. She will give you concierge service. You'll have access to the concierge channel, speaking of all the weekly workshops going back to like 2000. Well, we started that channel a couple years ago, but the weekly workshops prior to that are on our website. So it's all there waiting for you. Now, oh my gosh, I got to go watch hundreds and hundreds of videos? No. Absolutely not. If you simply show up for class every day, follow the alerts, tune into this broadcast, that's everything you need. Nothing wrong with going back and watching the old videos. If you have spare time, absolutely. But do you have to? No. The best use of your time is to be in the room in the morning, putting on, taking off trades, the simulator, when you first get started. And every time the Telegram alert sounds, because there's a logic alert, or the CTAs have been posted, that's your call to swing into action. Start trading right away in your demo account, in your simulator. Don't put it off. Well, I don't want to mess it up. There's nothing to mess up. You're learning, right? You're finger painting on day one, right? Just roll up your sleeves and go to work. Because the more you practice, the more you try to get the hang of it, guess what? It'll rise to the occasion. And you'll start to ask really good questions because you'll have questions. Good news is because our methodology and strategy is so simple, pretty soon you'll run out of questions. You'll have literally asked every possible, humanly possible question that you could ask because it's so simple. You'll find yourself repeating questions and going, oh, wait, I already know the answer to that. Then the clouds part. You hear the angels go, ah, right? And from that point forward, you never again will need anybody to tell you when to get in and to get out. Now, some people like that. Some people like relying on somebody to tell them when to get in and to get out, because if it doesn't work out, they got somebody to blame. When you start making your own decisions, you shouldn't blame yourself, but you're accepting responsibility. Okay? And just know, on your best day, 20% of what appears to be about to happen doesn't. Which means the other time it does. There was some market we were looking at to take some kind of move. What was it? Was it the S&P? Was it crude? Oh yeah, looks like it's getting ready to trigger. I guess I would have had time to type that after all. The swing high so far is 55. See, the reason I held off on publishing this is because I always want to build in a window cushion, is a better word, for when somebody hears the alarm sound that there's an alert. I want you to have an opportunity to go to your chart, study it, understand it as part of the learning process, because we don't want you to be dependent upon us forever to tell you when to get in and get out. We want you to learn how to do that yourself. We still want you to hang out because trading is a lonely business and you need people to talk to. You've already tried talking to your brother-in-law at Thanksgiving, and he just gave you a blank stare, and then people were whispering behind your back. I think he's lost his mind, right? So, see what happens. Good word for the day. It's that time. Friday, we talked about being of good courage, and then just do it. Today, we'll talk about keeping your conscience clear. Acts 23:1. I have lived in all good conscience before God until this day. At the Mark Twain Memorial in Hartford, Connecticut, you'll find these words framed. Always do right. It will gratify some people and astonish the rest. Truly yours, Mark Twain, New York, February 16th, 1901. Now, over 100 years has passed since he penned those words, and it's still true today. Facts change, truth never does. Again, what Mark Twain said was always do right. It will gratify some people and astonish the rest. When your conscience is programmed and governed by God's word, it will lead you to do the right thing every time. And it's created by the first lessons you learn about right and wrong. Which is why, as a parent, you have the most important job in the world. If you're never taught those lessons, you'll fail to develop a conscience. If you're taught them poorly or incompletely, you develop a stunted conscience. If you override your conscience and refuse to obey that inner voice, you develop a hardened conscience, and over time, you will live your life as if you don't even have one at all. You'll compromise, cover up, and you'll cut any corner to get what you want. Now, you can't see a conscience, you can't autopsy a conscience, but you can hear it whispering in your mind. You can feel it tugging at your heart. And those are the whispers and tugs you must respond to in order to walk in the blessing of God. Paul said two important things about his conscience. First, in Acts 24:16, I myself always strive to have a conscience without offense towards God and men. Now, I will say that if a situation arises where you're either going to offend God or man, go with God. Number two, I have lived in all good conscience before God until this day. Above all, don't neglect your conscience. It is either healthy or becoming unhealthy. And as it goes, so goes your character, your reputation, and the quality of your life. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.